I can tell you, Kamali, in the last few moments, the Bank of England monetary policy has decided to pause on its run of interest rate rises. Bank rate held at 5.25%. This is the first time in 15 meetings of the Monetary Policy Committee that it has not raised interest rates. Obviously, it began raising interest rates in December 2021 when they stood at just 0.1%, 1/10 of 1%. Obviously, there have been 14 consecutive interest rate rises since then, but the Bank of England has decided to keep interest rates on hold today. I will try and dig up the comments from the Monetary Policy Committee. Obviously, there's been, here we go, I can tell you what they've said now, Kamali. The Bank of England's Monetary Policy Committee, it's a very, very tight vote, actually. They voted by a majority of 5-4 to maintain bank rate at 5.25%. 4 members of the Monetary Policy Committee voted to raise bank rate by 0.25% to 5.5%. I will try and find out who voted, the breakdown of the votes here. Obviously, that has been based on what has been going on. We got that surprise drop in inflation yesterday. The August inflation number came in at 6.8%, 6.8 to 6.7%. That was very unexpected. But I'm looking also at what the bank has said here. It seems to be that big drop in headline inflation that has made it easier. The bank, obviously, though, remains very, very concerned about wages inflation and services inflation as well. The minutes conclude that the MPC will continue to monitor closely indications of persistent inflationary pressures and resilience in the economy as a whole, including the tightness of labour market conditions and the behaviour of wage growth and services price inflation. Monetary policy will need to be sufficiently restrictive for sufficiently long to return inflation to the 2% target sustainably in line with the committee's remit. So I think basically what the Bank of England is saying there is that interest rates, whilst they've decided not to raise them this month, they're going to be keeping them relatively high for the time being, which is in line with what we heard last night from the US Federal Reserve. Obviously, the Fed last night kept interest rates on hold, but the commentary was quite hawkish and it suggested that rates will remain higher for longer. Now, I can give you the breakdown of the vote here now by the Monetary Policy Committee. Those voting in favour of keeping rates on hold, crucially, they include the Governor, Andrew Bailey, and his Deputy, Ben Broadbent, also voting to keep rates on hold. Dave Ramsden and Hugh Pill, the Chief Economist at the Bank of England. No real surprise there. Hugh Pill had indicated in some of his recent statements that he favoured a modest pause. The other member of the MPC who voted to keep rates on hold is Swati Dhingra. Again, no surprise there. She's been the most dovish member of the Monetary Policy Committee. However, voting in favour of another interest rate rise were John Cunliffe. He, of course, is another of Andrew Bailey's deputies. Megan Green, she's the newest member of the Monetary Policy Committee. And then Jonathan Haskell and Catherine Mann. Both of them are the best-known hawks on the Monetary Policy Committee. Not a surprise to see them voting for another rise in interest rates to 5.5%. Well, we haven't got that this month. It is a massive day, I should say, for interest rate decisions right around continental Europe. Earlier this morning, the Swiss National Bank voted to keep interest rates on hold. That was a bit of a surprise. We also got interest rate rises in both Sweden and Norway, which does rather suggest to you the fact that there are still interest rate rises coming through around the world. We're getting the Bank of Japan tomorrow, and they're expected potentially to tighten monetary policy or indicate that they will tighten monetary policy right now. Very, very interesting line. I'm just looking at the minutes of the MPC here. They're saying, given the significant increase in bank rates since the start of the tightening cycle, the current monetary policy stance is restrictive. The bank obviously very, very still concerned about wages, inflation. Looking at some of the other comments they're making, they are noting the fact that market pricing, the market had been expecting, until those inflation numbers dropped yesterday, a rise in interest rates today. The bank says also in the minutes of the Monetary Policy Committee, there continues to be evidence that interest rates in financial markets have continued to be more sensitive to economic data outturns, particularly in the United Kingdom, than had been usual over the last decade. These data outturns could be volatile month to month. That almost sounds like a sort of cry for help from the Bank of England, really. They're sort of pointing out there that it is much, much harder to assess what market expectations are for further interest rate rises. And that, of course, feeds into their ultimate decisions because the markets are moving around in a much more volatile manner. Now, crucially here, it shows again that the bank is still... I'm looking at some of the comments they're now making on the bank's agents. Now, these are the network of regional agents that the Bank of England has around the country, which talk to local businesses, find out what's their minds. And it's very interesting to note here, the agents have noted a further sign of loosening in the labour market. Now, that really chimes with some of the figures that we've heard lately. We've had this very, very modest uptick in unemployment. But the MPC minutes go on to point out here, the labour market does remain quite tight by historical standards. The agents report an easing in recruitment difficulties, but also persistent skills shortages in some sectors. So that's the big headline this hour, Kamali. A big, big moment. The Bank of England, for the first time in 15 meetings of the Monetary Policy Committee, has not raised interest rates, but there are plenty of hints here that interest rates are going to remain at these sort of levels for quite some time to come.